Good afternoon and warm welcome to everyone. Thank you for joining us for the Royal Orchid Hotels Limited earning conference call for the third quarter for the financial year 23-24. Please note that the Q3 results, press release and investor presentations are available on the exchanges. I hope you have had the opportunity to browse through the highlights of the performance. Since April 23 onwards, we have seen good business, which is evident from the financial results of the earlier quarters as well as this quarter. In fact, we have built on the success and have added 5 hotels with 210 keys in Q3, and we have added 20 hotels with 1,039 keys since April, which is a record of sorts. The company has posted good growth because of its strong business model and effective risk mitigation strategy. We are working to post better margins than what our company has witnessed in the recent past. Financial highlights for the company for the third quarter ended December 31st on standalone basis are as follows. Standalone revenue from operation for Q3 was 54.74 crores as compared to 48.39 crores in Q2, a growth of 13%. This is an attribute to increase in new revenue share hotels. Standalone EBITDA for Q3 was 19.79 crores as compared to 17.36 crores, an increase of 14%. Standalone PAT before exceptional item for Q3 stood at 9.28 crores as compared to 8.2 crores in Q3 last year, an increase of 13%. Consolidated revenue from operations for Q3 was 86.61 crores as compared to 76.53 crores in Q3 of 23, a growth of 13%. This is attributed to the increase in new revenue share hotels. Consolidated EBITDA for Q3 was 29.43 crores as compared to 27.575 crores, an increase of 6%. Consolidated PAT before exceptional item for Q3 stood at 15.73 crores compared to 15.18 crores, an increase of 3%. If you compare our numbers with the same of last quarter, you will find that the consolidated PAT has increased by almost 105%. However, it is not prudent to compare the numbers with last quarter as the business cycle in the hotel industry is different in each of the quarter. I would like to inform you that due to the adoption of Ind AS 116, there was a notional increase in depreciation and finance cost, which has led to decline in PAT by 1.17 crores for the 9 months in standalone and 1.67 crores in consolidated financials for 9 months. I would like to inform you all that we were holding 51% stake in a subsidiary called Icon Hospitality Private Limited, which owns 130-room hotel in CBD, Bangalore. During the quarter, we have purchased the 48.93% stake from our partners at a cost of 32 to 34 crores, thus making it a 100% subsidiary. We were able to meet this investment through our internal cash accruals. In the last quarter, we said that we'll cross 100 hotels soon, We are happy to announce that our vision to operate 100 hotels have been fulfilled, and we are, as a company, are operating over 100 hotels. We're looking forward to opening new hotels in different cities in India and abroad. We believe that industry is on a growth path and we are on the right track. We are consolidating our operations, have done some expenses toward major repairs, maintenance during the last 9 months, as well as towards strengthening our team to achieve operational excellence. Due to above, our cost did go up marginally, but this will take our company forward in achieving greater results in future. We have taken planned and calculated steps and have looked at our long-term goals and targets. The same is necessary to achieve larger long-term goals. The management has set out a strategy to diversify its product offering, provide unique customer experience, and work towards a robust balance sheet. I would like to conclude my opening remarks by saying that we are witnessing major signs of growth in the industry as a whole, which will show up in the overall earning quality over the next several quarters. Thank you. And now we can throw the floor open for questions.
Thank you, sir. All those who wish to ask a question may use the option of raise hand. In case you're unable to raise your hand, you may send us your question on the chat. We'll take the first question from Chirag. Chirag, you can go ahead, please.
Yeah. I wanted to understand about the managed category. So if I look at FY23 PPT, we have shown an EBITDA in the managed hotels category, which is coming to roughly 34%. Now, as far as I understand, the EBITDA margins in managed category is very high. So could you quantify what was the EBITDA in managed category for 9 months? And what should be the EBITDA margin going forward in this particular category?
See, hi Chirag, this is Amit Jaiswal here. See, the EBITDA margin in managed category is definitely better. It is roughly around 50%. But please note that 30% of the managed hotel fees, we take it into the standalone as our royalty and the efforts put up by this Royal Orchid company. That is why the EBITDA is shown as around 34%.
Yeah, sorry, I was on mute. So you are saying 50% is the sustainable EBITDA margin in the managed category?
Yes.
Okay, but isn't that too low? I'm just asking from the perspective of growth. The growth that we are seeing in the coming years is mainly going to be from the managed category. Now, if I look at the number of room addition and all, maximum is going to be in the managed category.
Correct.
The current revenue in Q3, if you see managed category, it was close to 8 crores. On a base of whatever 80 odd hotels that would be having in a managed category.
Yeah.
So that translates to what, 40-50 lakh rupees management fee per year per hotel.
Yes.
And on that, you are saying will be only 50% of it will be.
Yes. See, please understand, Chirag, that to run this managed hotel portfolio, we need a lot of sales guys across the country. We have the corporate office expenses, the marketing expenses. So all these direct, indirect expenses are there to be taken care of. However, if you really look at the absolute numbers, the absolute numbers are not that great because we only get the management fees out of a hotel. The revenues and the cost sits in the books of the, the owner.
Yeah, but the 8% is the revenue that you are recognizing, which is
Not
which
not 8%, not 8%. You know, the revenue recognized is not 8%. It is around 3% of the top line and 6 to 8% of the operating margins that we recognize.
okay. No, 8%. I was talking about the management fees.
I'm telling about the management fees only. It's not 8% of the revenues.
About 6%.
Around 6% of the revenue, it comes as the management fees to us.
Okay, and 50% of that goes to the bottom line is what we're saying after taking care of all the expenses.
Yes, true.
So, okay, so if you see the recent interview, so Mr. Jaiswal, you mentioned in one of the recent interview that this year we are targeting revenues of 350 odd crores with 100 crores EBITDA. And
Yes.
next year we're targeting 450 to 500 crores of top line with a 140 crores EBITDA. So
Yeah.
these growth, like where are we expecting the growth in the revenues and the EBITDA when the managed category bucket is so small? Like how much of it is expected from, let's say, the industry growth in the ARRs, and how much of it is expected from managed and the rest?
You'd like to take over?
Yeah, see, we are anticipating a turnover of about this year about 340 crores, including our Jaipur hotel,
which is in the
which is an associate. And next year, we are expecting about 350 crores plus
Jaipur.
Jaipur. So it'll come to 390 crores next year.
Maybe we'll
Yeah.
target.
Yeah,
for it.
and of course, we are, all, if situation continues the way it is going in the economy, we may also touch 400 crore next year, which is what we had mentioned earlier.
And what is the EBITDA margin that you are expecting on this 400 crores?
See, EBITDA, we expecting an EBITDA of about 110 crores is, and then including Jaipur will be about 122 crores.
Okay, but that is a material downgrade from what you guided for earlier. So what are the reasons behind it?
No, we were anticipating some additional hotels on revenue share and all that. Some discussions were going on. Some did not materialize, but still is going on, and I can't really tell you because unless it's signed, sealed, and delivered, I can't tell you that. So I think what we've done is we've gone through a reality check, and this is what we are now anticipating.
So Chirag, if you really look at it, this year guideline, we had given around 345 crores. We are almost there, including the Jaipur hotel. The turnover of the company would reach around that. And next year, we are, with the existing hotel growth, we are looking at around 390 to 400 crores of top line. But of course, there are certain hotels which may come up during the course of the year that we are keeping our fingers crossed that can add to the revenue of the hotel.
So are you looking towards adding managed hotels only even going forward? Because I'm just not able to understand the incremental, benefits coming out of the managed hotels. Although in terms of number of hotels, it sounds huge, but when you do the math, when you look at the addition to the bottom line and top line, it's not that significant. So just trying to understand going forward how we are planning to grow. That is what I'm trying to understand.
See, we are, as I mentioned to you, that we have added 20 hotels in the last 9 months. This is a record for amongst all hotel groups. I don't think anybody has added that many in this particular period of time. And we are expecting, we already signed about 28 hotels with about 1,600 keys in the next, already signed, which will be coming during the course of this next year. In addition to that, because we are at various stages of discussion with various hotels, So we expect to another 10 hotels. That means not 28, we may add about 38 to 40 hotels in the next 1 year. And 1,600 is already signed, another 700 keys will be signed. So 2,300 hotels will come. Now we are looking at least about 3 hotels in the revenue share in the coming year. We already done 3 in the last year. And in this coming year also, we are looking at doing either leases or revenue share to about 3 hotels, which will, what your question which you're asking is, add to our top line. And yes, but both are required. See, to reach 100 hotels only on our own, will take us years. But now that when we go to the market and we are saying that we are 100 hotels, people say, oh, we look at it. Yes, they're worth talking to. So I think it's a big milestone we have achieved. And going forward, whenever anybody calls for discussion for management or lease, when we tell them that we are 100 hotels, they take us a little more seriously.
So broadly, 138 to 140 hotels is what you are saying
Yes.
by end of FY25 or 1 year from now?
No, up to March 25.
138 to 140 hotels.
Yes.
Okay. Okay, and coming to the ARR in the PPT that you mentioned. So the revised PPT was released today.
Yeah.
In that, if I look at the ARR in JLO is down roughly 4% YOY to 5656. So industry's ARR has grown, right? If you look at it on a YOY basis. So why has our ARR dropped?
I'll explain this thing to you, Chirag. See, what happens is when we add a newer hotel, as Mr. Baji said, we added 2 hotels. So it all depends. This is an average ARR of the company, not the hotel. So if suppose I am sitting at an ARR of say 5,600 rupees, and if I have added a hotel whose ARR is around 4,000 rupees, so the average ARR comes down a little bit.
Okay, so this is purely because of addition of
Yes, additional. See, similar.
Time to stabilize the hotel
Yeah.
also. It takes
Sir,
time to stabilize the
stabilize.
hotel also.
So similarly in the occupancy level also, if you see, right, in the seat investors present in the managed seat, see, we have added 20 hotels, right, in the current year. So what happens, any hotel comes up, it takes a time, 6 months times to come to the optimum occupancy. That is why our average occupancy is little bit. The existing hotel, let me tell you, the existing hotel which were there last year and which are operating this year, they all are doing at an occupancy of around 70 plus. But it is the newer hotels which brings down the overall occupancy of all the hotels.
Okay. Also, just coming back to the managed category, in managed category, the revenue, so you said that 6% of the revenues is what we recognize as management fee.
Yes.
Does that also include F&B across all the hotels, or we have different
Yes.
arrangements in different hotels?
No, including F&B.
Including it.
Okay. Across all the managed hotels, we get revenue
Yes,
share
yes.
management fee even on the F&B segment.
Yes.
Okay. Just one more question before I go back into the queue. Mr. Balji, you mentioned during the last phone call that when you were asked about the next 3-4 year vision, that we aim to grow at 25% per annum in terms of top line. Now, clearly, I just want to understand that, let's say beyond FY25, how do you see yourselves growing? And what kind of mix would you see? Let's say if you're aspiring for 1,000-1,500 odd rooms addition every year, then what kind of mix are you aspiring in terms of managed and revenue sharing and others? And how should we be working with it? Because I'm just not able to understand. If majority of it is going in the managed hotels, then as I said earlier, the number of hotels seems huge, but when you look at the numbers, it is not as inspiring as it looks in the number of hotels. So just trying to understand from you beyond FY25, what should be the growth aspirations for the company and in what mix?
See, what we're trying to do is, so after March 25, we are targeting not in terms of numbers of hotels, but larger hotels. See, earlier people were not taking us seriously and they were not giving us, but we are now targeting, we told our team also, our cluster heads, including our CEO, we all working towards getting larger hotels. And larger hotels are more coming from revenue share basis because if a guy has to give a large hotel on management, then he has so many more options. Whereas if he has to go to revenue share, then he has fewer players in the market. So we are looking at going forward a larger hotel on revenue share, which will give us a huge upside. And so I think our growth post March or April 25 should be exponential. Although number of hotels may increase, may go down, but with new revenue share and larger hotel, that is what our plan is right now, and we are all working toward that.
Got it. Thanks a lot. I'll get back in the queue.
Thanks, Shira. We take the next question from Rahul Bangadia. Rahul, you can go ahead, please.
Thank you for taking my question, sir. Just wanted to understand, sir, how long does it take once you have signed up a property for a management contract? How long does it take for the property to kind of do the required improvements, spruce ups, and then kind of come online?
See, it depends on what stage is a property in. We're taking some hotels which are already operating hotels. So what we do is we sign up, and only thing we tell them is that we won't put our brand till the renovation is done. So then they give us a renovation plan, and depending on the funds availability, they do the renovation at their own pace. So some things are done within 2 or 3 months, and some things take much longer. Like we have a hotel in, Amritsar. We are 100-room hotel. He said 50 rooms he'll do immediately, and 50 rooms he'll do a little later. So I think within 6 months, 50 rooms are operational, and balance, he's going to probably finish in the next few months. So I think there's no hard and fast, and and there will be some hotels which are greenfield. It may take 2 or 3 years, and some hotels which are we call brownfield. That means the already structure is up, is at advanced stage. So there we give them some inputs for the interiors part of it. Most of the other work has already been done. So I would say that there's no hard and fast rule, and some cases I have also say where people drop off because they said no, we don't have funds now. I don't think we're going to go ahead with it, and which are of course very rare. So I would say, but in most cases, within 6 to 12 months after signing, the hotels get ready. In most cases.
Okay. From where I was coming from, sir, is that, FY23, when we ended, the number that we had in terms of hotels or rooms, which included the signed up rooms also, was about 6,500. I'm just rounding off the numbers here. So 6,500 rooms is what we had in operational plus signed up rooms. Today we are at about 5,800, again rounding off. So that's why I was trying to understand that what we had signed up at the start of the year, we are still a little far away from actually ending up getting all those online as we get closer to the end of the year. So that's why I was trying to understand. And related to that is that now that we are saying that about 7,200 rooms is what we have in terms of operational plus signed up, Do you see the 7,200 coming up by March 25, next a year from now?
See, what we are saying is that today we have got 5,800 approximately.
Yes.
And in the next 1.5 months, we are likely to open out of these 28 which are signed. We may open about 6 to 8 hotels that we will open within
Okay.
this year. And the balance 22 will open the next year, and I've added that we'll open to 10 to 12 new hotels which signings will come up
Right.
during that period. So I think we are very much on track, yes, because so many times when people sign up also, and after that, they develop cold feet and they say that, no, we don't want to go ahead or so. But now what we've done is, because we're finding that there were a lot of delay in some of the projects. So we have actually, now got good, we've added a team of project managers who are monitoring these very carefully on proper bar chart, per chart. And so now we come up with a more realistic figure. I'm not saying it's 100% correct, but it's more realistic than what we did in the past. Example, there was a hotel in Varanasi and Lucknow, which we had signed a couple of years back, pre-COVID. There's no sign of those hotels. Now, in fact, the other day I called up this guy. I said, "Kya ho raha hai?" He said, no, hotel ready ho raha hai. So people have run into some problems in the past because of various financial issues and various other issues. But I think people are coming out of it, And, post-COVID particularly. See, there's never been so much interest in the hospitality industry as it is now. I'm looking at this in 2003 to 2008 period when everybody is interested in hotels. In fact, after that, it became untouchable industry. Nobody wanted to invest in the hotel. And no banks wanted to finance. But now we are finding that banks are interested in financing. And in fact, we had got a swap of our loan and we saved substantial interest. HDFC, which used to consider hotel industry as untouchable, they themselves came to us during the COVID time and swapped our loan. Probably they had some inside information that we start doing well also. And so we saved a good about 3% on our interest cost. And so I think, to my mind, if things are going and politically things are very stable, you can see even the mood of the nation of India today, which is very skeptical about Modi government, is saying that Modi government is going to come back, and that is all going to be definitely good for the India story. And I am very, very hopeful for a substantial increase, which is why we've added a lot of management team. And the question you were asking again and again so many years, that who's going to head operations? And when we got Mr. Phil Logan, he joined about six months back. So luckily he's got experience in India, so he knows Indian market. And so we hope that with his joining in, we should take the company to newer heights.
What I can say in that regard, just for everyone, is Royal Orchid is very aware of its cost structures. It runs small hotels very well. I think Mr. Balji's alluded to our vision to get larger hotels. Our finance team is extremely strong. Our operations team is extremely strong, actually. And I put that in context against international operators on the ground. What I can also allude to you is that, yes, it does take time for hotels to come to stable, and there's a lot of hotels. So stability takes time to kick in, and it also takes time for the operation. And Royal Orchid is diversified right across the nation. It's in 16 states, everything from Dharamshala to Bangalore, Pune, right across. So its diversification means it's challenging from a human resource factor and takes time to get the operation correct. but that's all upside.
Great, sir. Thank you for answering those questions. Thank you.
Thanks, Rahul. We'll take the next question from Garvit. Go ahead. Garvit, you can go ahead, please.
Hi, am I audible? Hello,
Yes,
am I
yes.
audible?
Yes.
Good afternoon, team. My question is on guidance. So, you provided a guidance for FY24 350 CR, but if I look at the first 9 months number, we did around 220 CR. So, what is giving you the confidence to fill the gap? Basically, this gap is huge, around 130 CR in Q4.
No, 220 CR is excluding our Jaipur hotel. 230 CR we have done, we are excluding our Jaipur hotel.
So, if I include that Jaipur hotel numbers in first 9 months, so what would be the number?
It is around 22 CR.
22 CR in first 9 months for Jaipur hotel.
Yes.
Understood, sir. So that means we will
So
be
it
around
goes
100
to around 252.
Right. It will go around.
Yeah. So hopefully we should be able to touch our target.
Understood, sir. And sir, whether are you people like you people reduce the guidance for FY25? So do you people see any kind of risk that is likely to come in on an average industry point of view?
No, I don't think there's any risk right now coming in the near future, because whatever has already happened, and nothing worse can happen. If you see, COVID happened, and there'll be small things, like example, this year during the rainy season, we had a big washout in the hill stations because of disruption of the roads and stuff like that. But it was major disruption, but impact on our company was little, because those are mostly managed hotels. Those managed hotels and also smaller hotels. So like in Manali, we have a hotel, there are two hotels with 25, 35 rooms, right? So if there is an impact there, it's not very much impacting the company. But yes, these small things will happen. I cannot say but overall, I think we are a stable ship, and fact that we are diversified across the country. We have got leisure hotels, because when the holidays take place, the business hotels come down in business, but holiday destinations have gone up. And if you see the trend over the last, at least post-COVID, is that holiday destinations, people have started taking larger number of holidays. We have got in our country 20 long weekends. So they are 4 days holidays during that period. And youngsters today are like, following that you only live once. Let them go and enjoy whatever we have. We don't want to leave anything for the next generation. Don't want to leave for the next life. So that way there is a big boom in this particular, holiday destination, holiday market. There's a big boom, and overall, if you see the economy in all sectors, economy is booming, and I think the business hotels will also continue to do well.
Okay, understood, sir. That's it from my side, sir. All the best.
Thank you, Garvit. We'll take the next question from Sajal. Sajal, you can go ahead, please.
Hi, I'm assuming I'm audible.
Yes.
First of all, I would like to thank the entire management team and congratulate them for achieving the 100 hotel mark, which was being talked about for years now. So congratulations, everyone. My question is first question is around slide number 19 and slide number 20 in the investor presentation. In slide number 19, we are talking of total keys of 4941 plus 1039 from the first 9 months. And after that, there have been 2 more announcements of Bhaksunag Hotel and the other hotel at Jamnagar, which adds 81 more keys. But in slide number 20, I see total keys as 5795. So there is a discrepancy in this, and this number has come down. So is there any hotel that has closed or something like that?
Five, 795.
5795 is a regular operational. This is including sign hotel. It's more only.
No, see, if you're talking about the slide number 19 and 20, right?
That's
So in slide number 20, we are adding, including the signed hotels.
Oh, okay. Because it mentioned operational as on date.
No,
and
no,
probably
no,
that
no,
created the
no.
confusion.
If you see signed hotel, in 57,
Is comparing this.
5795. So 576, is including the, all the hotels. 20 to
This
20,
is
signed hotels, 716.
This is the only managed hotel. Is forgotten.
We have leased and what are you comparing? Tell me.
Okay, let me tell you. So I'm comparing on this slide number 19. There is a figure which mentioned total keys for financial year 22-23, which is 4941. In addition to that, there are a 9-month last column, which is 1039. The total number comes out to be 5980.
4931.
No, 1039 includes
Includes,
one which are there. 5,600 includes this 1,039.
Yeah, so slide number 19 says 4941 for financial year 22-23. And
One second. Slide number 19 shows, yes. It shows 5795 total keys, right?
No, slide number, okay, we might be off. I'm talking about the slide which says segment-wise occupancy, ARR, and keys.
Acha, 5795.
There it says 4941 in total keys for financial year 22-23.
Correct, 4941.
And 1039 for first 9 months of financial year 23-24.
Yes.
The total comes to 5980. Post that, since 31st of December, we have added 28 rooms in Bhaksunag and 53 rooms in Jamnagar. So 81 rooms added to this. It would take the figure to 6061. Now
we are showing only till 31st March.
31st December.
Okay.
Yeah.
Fine.
Yes, one hotel. We have removed 2 hotels.
Oh, we have removed 2 hotels.
2 hotels, yes.
So has there been any communication around that, or maybe I missed that?
No. We have not communicated.
Uh,
See, basically what happens, 2 hotels has gone legal. That is why we have still not communicated.
Okay. Fine, sir. The other question is related to just give me one sec. I noted it down multiple places.
Yes.
We mentioned around specific steps, around steps being taken for enhancement of the profitability. Can you elaborate on what are the specific steps? And my other question is also related to that.
Specific steps like we have increased our team. Okay, see, a certain team has been included because with the increase in number of hotels, you need the team to manage this hotels, right? However, the result would not have come now. It will come in time to come when all these hotels starts yielding result.
Sure, sir. Thank you. My other question is also related to like given that ROHL is now a brand well known in the market. And Balji sir, you actually alluded to some part of that question when you mentioned about HDFC Bank providing the loan. But are there any other operating leverages that we are able to gather because of this enhancement of the brand value in the market and we crossing 100 plus hotels?
See, what we're doing now is that a lot of brand architecture we are exercise going on right now. And we are going to be very shortly introducing an upmarket brand so that, which will be 4-5-star hotels. See, because we had got Regenta Central, Regenta Place, Regenta Inn, Regenta Resort. So what happened was some of the owners and customers expressed that there's a little confusion because so what maybe Taj did some years back and is exercise that we are doing now because we've reached that critical mass of 100 hotels. So we are going to be going forward. They will be upmarket brand. They will be a smart, we won't call it budget, but smart value brand going to be introduced. So 2 or 3 brands are going to be introduced within the next 2 or 3 months. And those you'll see the announcement very soon. And we hope to take this company to a much larger, level and a faster growth trajectory.
Sure, sir. Thank you. Sir, my other question is and probably the second last question, which is around: are there any plans to probably provide some benefits to the shareholders in the form of maybe subdivision of share or something like that? Because bonus obviously is ruled out. The kind of growth that we are seeing, that should be ruled out. But any plans for the subdivision of shares?
Yeah. So we can't really say at this moment, but we are very well aware of the interests of the shareholder. I being the largest shareholder, so I think whatever you are suggesting, right, will definitely benefit me. So you can be rest assured. It's just that there could be 2 opinions about any particular course of action, and we want to tread with little caution. No, that's all. And but you can be rest assured that shareholders' interest is top of our mind.
Sure, sir. Thank you. Sir, one last suggestion before I end. I have been communicating on I've been sending mails to the CS of the company and probably Balji sir to you as well. It would be great if there can be an acknowledgement to those mails. Otherwise, we are not sure whether those mails are being received or not, or what.
Totally agree with you. What, some mails have not been answered?
Yeah, the mail is not around any grievance. It is only about suggestions that are also made in this call. But yeah, it would be great if there can be an acknowledgement to the mails.
We will definitely do.
We'll definitely.
Sure.
Definitely.
And at the end, thank you very much for all the hard work. It is a great pleasure to be associated with ROHL. And one more suggestion, sir, if you might like to consider, and that might increase the occupancy of the hotels as well, which is if you can provide a kind of a special incentives to all the shareholders in terms of their stay in the hotel, that would lead to better occupancy and we staying in our own hotels and promoting them as well.
Certainly consider. We certainly consider.
Thank you, sir. Thank you for your time.
Thank you, Sajid. We'll take the next question from Yash. Yash, you can go ahead.
Hello, am I audible?
Yes.
Yeah, so is there any update on Multi Hotels Limited, the sale of those shares?
Yes, there is a lot of active discussion as we speak. There are 5 brokers who are working on this. Last time we had got an offer. It was a firm offer, and we were about to close the transaction. Unfortunately, they wanted to buy the land and not the company. So if we had done that, then our money would have been stuck in Tanzania because underdeveloped country, so repatriation of foreign exchange is difficult. That's why we stepped back. But we are actively pursuing it, and we are hoping now for the sale. I cannot really tell you which date, but there is now interest. Earlier, there was no interest at all. Like I said, for hotel industry also in our country, there was a untouchable. Now suddenly it's become the hot favorite. So similarly, there also situation in Tanzania Tanzania has changed dramatically, and we hope to close this very soon.
My next question is, can you give ARR guidance for the next year, for the next financial year, 25?
Yes, I think we can say that 8% in yellow and 6%.
Okay, just a response to that. Our guidance is for JLO hotels, an 8% increase in 24-25. And for managed properties, 6% is the guidance of ARR lift in fiscal 24-25.
Perfect. Also, my next question is, why haven't you announced anything for Ayodhya? I mean, aggregators like Ease My Trip have also launched properties, aggregators that have nothing to do with managing hotels or, hotels itself generally. So I just want to know, are we behind the curve with the whole Ayodhya thing? Because everybody, almost every other hotel is launched. Or is it that you don't find it feasible margin-wise, you're not getting enough margins because it's a hot property right now?
No, Ayodhya, there is a lot of land which are available, there's a lot of hype. And but as a company, we are not looking at making major investments in greenfield projects. So that is why we are just watching. There will be a lot of people who are going to construct hotels. That day there was an ad for almost 8 to 10 sites which are under auction. So those people, when they come up with hotels, I'm sure they'll be looking at operators. And so it's not that we are behind the curve. It's just a strategy. Suppose we put in all our money into Ayodhya, then are we missing out on so many other opportunities? Because we are going to put in money into our Goa hotel, which is our own hotel. We're expanding that hotel. We're expanding our resort in Bangalore. So there is, investment required there. So we don't want to spread ourselves too thin. We're waiting and watching. Yeah, see, Tirupati has been a market for a long time, and but these are usually one-day markets. People go there, do the darshan, and move on. So while I'll say that yes, you are right, we are very keen on that. Our people, our development people are looking at, uh, in, looking out for projects there. And hopefully we should get something there very soon.
Yeah, my next question is regarding, since you mentioned the Goa capex, could you give me a particular timeline for the Goa capex? And you also mentioned something about the Bangalore capex. So give me the timelines in the room addition for both, if possible.
See, a resort within this year, Goa within this next 1 year.
Next 1 year in the sense, FY25 mid
Yes,
end.
yes. I would say up to March 25, we should have spent this money and got the additional 44 rooms ready, including the Bangalore.
So you're telling me, Goa and Goa plus Bangalore capex. Can you tell me the total number of room addition? And both are owned, right?
Both are open.
Yeah. So what is the total number of room addition to both?
In Bangalore, it is 28 rooms. In Goa, it is 40 or 40 rooms. 44 rooms.
Also, just
But
a
both the
last
hotels,
suggestion.
no, but both the hotels will see the revenues next year only.
Okay, understood. Also, I just want to understand why is your PPT so vague? I mean, you put 100 plus hotels in your PPT. I just want to know, why don't you put the exact number of hotels you're operating? Because you definitely know the number of hotels you're operating. You put 100 plus in your PPT. I don't know why there's a plus there instead of the exact number of hotels you're operating.
You know what's happening? As I mentioned to you, in the next 1.5 months, we are slated to open 8 to 10 hotels. So, every day I don't want to be telling that, okay, it's 101, 102, or whatever it is there. So we've kept it like that, 95 plus, 100 plus, as a communication. You see, if I say 101, or if I say 100 plus, it's just a matter of, communication. People find it a little more easy to look at that. So, but your point is well taken, yes. And all communication to change also is very difficult. Like our visiting cards are printed. It says now 100 hotels, 100 plus hotels. Now it goes to 102 hotels. I can't change it to 102 or something like that.
So we have eight hotels in full pre-opening and another 2 with team on the ground. So that should give you an indication of likelihood. However, the technical handover, the final licensing, liquor licensing and other things and local licensing can be quite tricky. So as it's managed, we work with the owners on final licensing and that. But we have literally 8 to 10 hotels very close, but it could be 6 in this financial year and roll over to the following month. But
Yeah. Also, one last thing. With the whole hotels, the way you guys are adding managed properties, which are you planning to add more lease properties in the future?
No, we are not adding any. See, whatever we have said in the 2 hotels that we are adding more keys. Other hotels, there is no scope for adding, in those.
More leased hotel or.
Yeah, leased hotel, of course. We are actively
Yeah, but
pursuing
what's your
as a-
focus? What's your focus among?
See, I tell you can't say what is the focus. अगर lease का hotel मिल रहा है, मैं ले लूंगा. If it's fine, lease terms are. See, today what we are doing is we're trying to take hotels on revenue share with minimum guarantee. We have done hotels in the past with their even pure revenue share. So where there's no minimum guarantee also. So we've done that in the past. That's our preferred model. But if there's a minimum guarantee required, we're trying to do that. And lease out of the 3, yes, pure lease also, if a hotel is not available, we take on a pure lease also.
Also, you said 2 to 3 categories will be announced in the next 3 months. Where are you going to focus on? Are you going to focus on the upscale front, meaning the luxury front? Because you said
all.
your
We're going to focus on all. There is no definite thing that we are going to focus only on one or so. The focus will be on all because we want to increase our footprint in each category.
different
also
markets, different markets
last
offer
question.
different opportunities. So that's why you increase all.
Yeah. Also, you said in the last con call, I think you said 50 hotels. So you were targeting 150 hotels by the end of FY25. Did you correct that to 140 hotels today?
Yeah, I would say. Yeah, realistically, yes. Yeah.
Okay.
Okay.
Okay. Thank you so much. I'll just come back in queue.
Yeah.
Thank you.
We'll take the next question from the line of Mihir. Mihir, you can go ahead, please.
Hello, sir. I have one question regarding room addition. So, if we see the average room additions for 28 hotels and 1600 keys, it comes to approx average of 60 keys. Any
Yeah.
plans to increase the size of hotels?
Yes, I had mentioned to you earlier, we're actively scouting around for bigger hotels, and that's our strategy now. Because you see, earlier when you were a smaller player, bigger hotels will not come your way. People will look at maybe larger and bigger brands. But now I'm finding that people are ready to talk to you. If you go to a Delhi guy, a Delhi builder in Gurgaon or so, and you're telling him that you got 40, 50 hotels, he may not even, he probably not even heard of your brand. So first you have to explain to him his brand. Now the guy has been most probably heard of our brand, or even he's not heard. The moment we say 100 hotels, he sits straight and has a look at it. Yes, oh wow, 100 hotels you get. And then of course we give our presentation. And so I think larger hotels have started discussions with us now.
Okay, sir. Thank you.
We'll take the last question from Sajal. Sajal, you can go ahead, please.
Yeah, I missed 1 or 2 questions very quickly. Given the focus on Lakshadweep, is there anything that we are doing to get a early movers advantage in Lakshadweep?
No, we are not looking at luxury because
Lakshadweep.
Lakshadweep. No, we are not looking at Lakshadweep because those are all greenfield projects. And we don't want to get into anything. Because there are a lot of land available. Government is now encouraging us, encouraging people. The same strategy what you mentioned about Ayodhya also, that there are land going to be available. But it'll take some time. You see, as it is going to, there was a tender which had come about 6-8 months back about Lakshadweep. And we looked at it, then going there was a challenge. There's one flight going from Cochin only to that place, or there's a, streamliner which is going, which takes about 14-15 hours. So I don't think, there are plenty of other hunting grounds we have for us to now get into first. We have already made an inroad into Sri Lanka, and there are some other proposals coming our way. We look at that. And I would like to say that we have done an inroad into Nepal. So we've already signed 3 hotels in Nepal, which should open. So I think, and without any investment, all these are without any investment at all. So we look at that also, that mainly.
Sure, sir. Thank you. The last one is, if I look at the map of India that has been that is there on the slide number 11, it is evident that we are more focused on western part of India as compared to eastern part of India. The good part is that there are 2 hotels that are coming up, one in Tezpur and another one in Puri, which would be on eastern side. Is there a plan to tap the potential from or northeast, the Seven Sisters?
We already have signed one hotel in Tezpur, which is northeast. But while all this is good to talk about, but the real revenue or the real profits do not come. See, even in the economically, East is not that developed as the other parts of the country. We started from South, and the question which all of you used to ask me those days that we are only South based, but now I would say that we have a very dynamic, vice president, senior vice president North, who's expanded our footprint substantially in the North. So now we have got North, we've got West, and we've got South, well covered. Only thing is that we are now focusing on some states in Central India, East, Northeast also, and maybe Tamil Nadu and Telangana and Andhra. So we are focusing on that. Recently, I attended a convention in Vizag, and it was my first visit to Vizag also. So we are already talking with at least people get to know about our brand. I was invited as a speaker there. So I was talking to them. At least people got to know that yes, Royal Orchid and Regenta Hotel also exists. So we're expanding. We're very well aware of it, but you're right. Some of the uncharted areas will tread with caution. Because एक hotel खोल दिया, उसमें कोई revenue नहीं आया, then owner gets disappointed, we get disappointed. So we are calculating and then taking a step.
Sure, sir. And being from Summerhill, Shimla, I can very well request that probably you might like to look at introducing the world famous gulab jamuns and grilled sandwich in other parts of other hotels as well as a Shimla specialty.
You know what we've done? I'm glad you pointed this out. In our hotels in Shimla, we don't give a welcome drink. We give a welcome gulab jamun. So in the reception counter, we kept some gulab jamun in the fridge. The moment a guest comes, we take it out, put it in the microwave oven, and heat it and give it to the guest. So they are welcome gulab jamuns and not welcome. So it's a very good. I know that our restaurant was very, very famous for the last 60 years, for 60, 70 years for all this. And we'll continue to, continue our legacy.
Thank you, sir. And I probably should visit the Shimla Hotel in that case.
Yes.
Thank you, Sajal. And that brings us to the end of the conference call. Mr. Balji, would you like to give some closing comments?
First of all, thank you very much for and the question that you asked. are very relevant. It makes us think. And I think all this Concall always gives us maybe even some guidance from you guys, what we should do and what we should not do. So I think it's been very useful for us. I thank you, all of us, all of you, for spending some time and asking questions, because sometimes we become a little complacent, don't ask a difficult question. But once a difficult question comes, it makes us, much more rejuvenated. So I think we hope that we'll have a lot of answers to your question, more answers in the next quarter, which will be the full year result also. So thank you very much, and see you next quarter.
Thank you so much, sir. Thank you to all the participants for joining us on this call. And thank you to the management team for giving us their valuable time. You may all log off and disconnect now. Thank you.